Landlords, how you doing today? Welcome back for another episode of Ontario Landlord Series, information that landlords need to know. Today joining me is a good friend, colleague, a gentleman I've been working alongside now in the real estate side of things for my entire career, which is coming up about 13 years now. Mr. Dion Mahadeo from RBC. Welcome. Thanks for joining us today. How are you?
Very good. Good morning, Kevin. Nice to be here.
Yeah. So as I mentioned, Dion and I have been working together for 13 years. As I'm sure everybody knows in the finance world, right, when we're looking at financing investment properties, that there are different options that people use. A lot of times we end up in the private sector, but there's different mortgage brokers out there. But one thing that separates RBC from everybody else is that you can only get an RBC mortgage from an RBC broker like Dion. And then again, when you're comparing different mortgages around, there's always different things that they can be specific about, right? The situation and everything really matters to how we can break down each individual deal because they are different. It's not just always about the rate. That's right, right? Yeah, not just always about the rates. There's other sections to the mortgage, to the contract, to the agreement that they have to understand. So one thing that's recent right now to what's going on that I'll bring up that I know is definitely a big thing is the pre-construction rate hold that RBC offers. And why don't you just go into that, Dion, and I'll leave it like that.
Perfect. Yes. So yes, Kevin, we've been doing this the same amount of time as well, about 13 years. And so, yeah, we've definitely seen a lot of market changes and a few things that RBC does that is very unique and is a great advantage to clients, like you said, is more than just the rate of things, which we will go into that, of course. But with respect to pre-construction, so this could be, condos, freehold, townhouse, detached, semis. It doesn't matter. Anytime it's a pre-construction, RBC, with respect to Ontario, we have got our sort of pulse on a lot of projects in Ontario, majority of the big builders out there. RBC is a proud partner with many of them. And so what that means is that we have different advantages on pre-construction sites. And so, for example, with condos, if it is an RBC approved site, a couple advantages. So one is we do have preferred rates on these projects, and most of these projects, like a condo, obviously we don't know when it's going to close. It could be, they put in the contract maybe 2-3 years out, but potentially it could take longer. So what happens in those situations that RBC, when you come to me to get what clients normally think of as a pre-approval, we end up wanting to make sure the client is protected all the way through. So we do something called a firm approval or an agreement in principle approval. And why that's different is that if a project is going to be built in, say, 3 years, and we think, okay, maybe building in some delays might be 4 years, we can do rate holds up until, in some cases on certain projects, 4 years and 5-year rate holds. And the rate is not, again, important, but more about the rate hold time frame is what's important. So if I approve you today for 5 years in the future, the key thing to know is that firm approval or agreement in principle will hold that whole time, meaning that as long as we don't change the purchase price, the borrowers, there's any major changes, everything stays as it did the day you signed the contract, then we're going to honor that approval regardless of your situation 4 years in the future. So if you change jobs and went self-employed, that maybe then you wouldn't qualify in 4 years' time. You're between jobs, you're unemployed. We are going to grant you that mortgage because we approved it 4 years ago. That is the biggest advantage, that clients will not have to stress about knowing their situation in the future because we've approved them from day one. So that is a big advantage.
Yeah, I can just touch on that just to give someone a real life example. Somebody purchases a home, an investment property, and during those 3 months of closing, they decide to go out and turn around and buy a family car. I actually had this with one of my clients a few years ago. I'm not going to name the lender, but they had to scramble and figure things out very differently because they did a check again towards everything about 2 weeks before closing, and then they saw that their GDS TDS ratios no longer were in line because they had went out and bought that car, leveraged themselves, and added another payment to their portfolio. So anyways, we had to scramble and do something. So that right there is something with RBC that they wouldn't have to worry about. Once you have that approval, they could go out and buy that car, and you guys wouldn't be doing a second check as long as they had that approval in place, correct?
Absolutely. So whether it's pre-construction or even a resale, you buy a resale property, you're closing in 60, 90 days. The advice that I give clients is let us do the approval first at RBC, because once it's firm approved, maybe within the financing window at the beginning of the process, basically, yes, at that point, once they're approved, they can then go out and get the car. Don't get the car first and then try to get the mortgage approval, because yes, it could cause some issues. So that is definitely a key advantage with respect to having that approval. And yeah, that's a good point, Kevin. I mean, having those added costs is definitely a negative. But then, like I said, with pre-con becoming so far in the future, nobody knows what happens with their careers and jobs and things like that. And that's the bigger push, is that they just have that confidence in knowing, I bought this place, I'm good. RBC approved me. If I decide to go self-employed and then I don't have any income now, or my 2-year average is nothing at this point because I just started being self-employed, then I wouldn't qualify. I already qualified, at the time I was employed, for example. We're going to honor that approval.
Excellent. I'm just going to circle back quickly to the pre-construction rate hold that we were saying as well, because I think that's really important in times that we've just been through as well, where we've just seen a huge uprise in our rates, whether it's fixed or variable, from just a few years ago, where some people could have signed contracts with their builders, right, 3-4 years ago, well before this has gone up. So they would still be having that rate from back then, right? If this were ever to go on again or whatever, they're going to get the best of that. Do you want to just touch on that a bit for me?
Absolutely, yeah. So I can give a recent example. Clients that bought pre-construction before the pandemic, sort of like 2019, 2020, on top of having the firm approval, I was able to hold rates for them. And I had one client in specifically that just closed, well, not just, but probably about, I would say about 18 months to 2 years ago now. We rate committed them at a 5-year fixed rate. I think it was 2.99%. And I held that rate hold all the way. It was 3 years. So 2023, they closed. And, rates in 2023 were probably in the 5 to 6% range. And we guaranteed them that 2.99 rate. So they closed, and it was an investment property. So they were able to close at that 2.99 rate for 5 years because I rate approved them and everything ahead of time. And so that rate would be honored, and we would stand behind that. So that's a huge advantage to them, because they did not have to worry about having these ballooned payments that other clients had to if they just got the approval a few months prior to when the builder said, hey, we're closing, you need a mortgage.
Yeah, I remember about a decade ago with pre-construction when we were saying things like, oh, we just need a letter to get them approved. That's all we need. Just put pen on paper saying that they will be able to afford it when it's built in 5 years. And sure enough, here's and where the firm approval actually is way better than them having to scrape around quickly at the end to try to figure things out to get something once all these things have changed later on down the road. With purchasing a property, let's talk about purchasing a resale property here for a second. And we're buying something now where there's a tenant in place, and we're having to then get qualified for that mortgage. There are lenders out there that will use 50% of that lease agreement, right? So if they're getting $3,000 a month in rent, they'll use $1,500 to qualify towards your mortgage to help you out. There's some lenders that want to see you qualified for it all on your own. But with RBC, you guys will use 80% or even 100% of that rent. Do you want to explain how that can benefit our landlords?
Absolutely. So when buying a resale property, you have that situation where you're buying it, and we're looking to qualify. We actually do take a market rent, and so what happens is I will have an appraiser give me a market rent assessment for that area. They'll give me a range. So, for example, if they were, buying a rental property in downtown Toronto, and the market rent would say, let's say, they would give me something like, 1-bedroom condo might rent for, say, $3,500 to $4,000 a month. I could be off, but let's just say it's around that range. They give me a range of that, usually between like a $500, $35,000 to $4,000. I'll get to use 80% of the $3,500 into our calculations for TDS. So it's not 50%, it's not nothing. You can actually use 80% of that lower number. So it is a bit conservative, but it still is 80% of that number. And we can add that into the application to help things. So when I sit down with a client, I can't really give a client a pre-approval on an investment purchase, but what we can do is we can run scenarios to say, based on this scenario, your income now and a market rent of X, 80% of that, here's what we're looking at qualifying. So that way they can go out looking prior to and know that they would be, qualified and not kind of hoping that it would work out. So we can use 80% of that. And then in the case where, and this sometimes happens where, a landlord is buying a property from another landlord who just, maybe is leaving the country, who knows, and they just don't want to have the property, but the tenant wants to stay on. If we can get some confidence that the tenant is staying on with the property and the purchaser is now going to be the new landlord, then we'll be able to use 100% of that rent, whichever is better. Because sometimes maybe they had a lower rental payment that they're kind of locked into, and it may not work as well as 80% of the current rent. Whichever is better, I get to use.
Excellent. No, it's good to know right there. And remember, folks, this is just Dion and I having a conversation, trying to give you guys some information about some situations that can benefit you. This is definitely not specific to any situation or any individual. Every situation, every property, every person is going to be different. So this is just, again, a conversation that we're having here. If you're enjoying it so far, don't forget to like, subscribe, tell another landlord friend to join in on the fun and follow along and learn something with us as well. And I'm going to now bring up what I think is the best part here, and that's an extra door, what I call it. So, and when I'm saying that, I mean, when we're looking at getting mortgages here, there's a difference between residential and commercial mortgages to having a larger down payment. When we're buying multiple residential, most of them are commercial units. Once you get over 5 units, they call it a commercial mortgage. But anything, 2 to 5, they call it residential mortgage, which means only 20% down. But with RBC and with Dion here, and I'll let him jump into this, but you can get 6 units instead of just 5 with the residential mortgage. So if you're thinking about the difference of 20% versus 35 or 40% on a $2 million purchase, that's about $40,000 you're able to get into to purchase without having that full amount. But anyways, Dion, I'll let you. You're the specialist there. Six units for a residential mortgage. How does RBC do it?
Yeah, absolutely. So that is another key differentiator RBC has that kind of shows the value. So we can do as residential. So that means, to your point, Kevin, a 20% down payment all the way up to a 6-plex. So when you go commercial, a lot bigger down payments, a lot higher rates. We're able to do it as a residential mortgage, residential rates anywhere from mini micro condos all the way up to 6-plex. I can do as residential. So that is, a key differentiator for landlords when they're looking to get the most doors possible. We can do up to 6 doors. And so if you go anywhere else, it's going to be bigger down payment, higher rates. And that is a clear differentiator for us. Now, the only thing I will point out is if you are thinking of a property that has any kind of commercial component to it, like an apartment above a convenience store or something of that nature. Unfortunately, that's not something that I do finance. That would be commercial at RBC. So as long as there's no commercial component to it, so if you have a 6-plex and none of it is like a hairdressing salon or something, we can do it. 6-door residential will get you residential rates, residential down payment, and I find that's a great feature because a lot of the older cities, they do have these multiplex units, and so most lenders might only go to 4, and we'll do 5 and 6. So it's a great plus when you're looking for the most rent out of one property.
No, like I said, that's definitely something that I pitch to our landlords all the time, to be able to get that extra door. Not that I want to make this an RBC commercial, but as I said at the beginning, you guys are the only ones that can get an RBC mortgage. So when people are out there looking for financing, they should always compare their brokers to somebody like yourself at RBC just to see what they can do. Again, the big one for me is the 6 units to 5 units, right, for everybody else. But is there anything else that you want to share about yourself, RBC, or anything about why people, landlords, should be discussing things with you?
Yeah, absolutely. So, RBC specific, like you said, it is good to shop around and, get all your options, and definitely speak to me because I would basically, what I like to say, I would complete the lending loop. You'd have all the lenders in Ontario covered if you go to a broker for options and for me as well. and kind of see where we're at. And like I said, again, we weren't talking about rates, but the rate hold thing is important, and the fact that some other lenders out there, because it is a rental property, will charge a premium for investment properties. We don't have a premium. We actually charge the same rate if you're buying a home to live in versus an investment property. So that's a huge advantage as well. And I mean, working with myself, a lot of years of experience, like with Kevin, we've been doing this now for 13 years. We've kind of seen pretty much all of it, I think. I'm sure there's still some we're missing, but I've definitely seen all the ups and downs. And, with that experience and advice, we always lead with advice here at RBC. And myself personally, I don't consider it just helping you get a mortgage. It's more about considering all your overall plans, getting to know you better, figuring out how that works for your future plans down the road. If it's, buying investment properties for retirement, or maybe pass on to your kids. We'll get more of that information from you. I want to get to know you better and figure out what works for you and your family. And so that's what I would say I'm here to do, is to provide advice and not just look at it as this particular transaction isolation. I want to be able to help you meet your goals. Like I said, whether it's retirement, passing on properties to family, whatever your plan is for buying an investment property and being a landlord, that's where I want to come in and be able to help you understand and make that plan and make it a success for you.
It's exactly it. I say all the time, as investors, we're as individual as our fingerprints, right? What situation is going to be right for some isn't always great for everyone. So it's about breaking it all down, seeing your options, and figuring out what is the best option for you as you move forward. Let's call that quits right there. I think that's a great little episode of information packed about a few different things here. Using 100% of your lease, or 80% was the big ones. Firm approvals. We talked about a pre-construction rate hold. Again, if you're buying pre-construction, the builders will no longer just take a letter saying, "Oh, by the way, he can't afford a house," like they used to back then. So getting something that's pre-approved and firm all the way until the end for 4 or 5 years is great. And then obviously the 6 doors instead of 5. Thank you, Dion, so much for joining us today. Our landlords are appreciated for sharing your knowledge. And we'll talk to you again soon.
I appreciate it. Thanks for having me on.
Bye for now.